Good morning. I'm Elaine Ellingham, President CEO of Omai Gold Mines. We're listed on the Venture Exchange. I'm an exploration geologist originally, 40 years in the business, and started out in the trenches and a lot of exploration on gold projects, so particularly relevant to Omai. And the Omai project is in Guyana, which is in the north side of South America. And Omai was actually a fairly well-known large-scale gold mine that operated between about 1993 and 2005. When it was in production, it was the largest primary gold producer in South America, producing over 300,000 ounces a year. So it shut down in 2005 when, as many of us remember, the gold price was extremely low. It was under $400, and the project reverted to the government. So this is sort of the ideal property to jump back in and do some exploration. And it's been quite successful over the last 3 years. We've identified a mineral resource estimate of 4.3 million ounces. And in April, we completed a PEA. So happy to walk you through the project. As I mentioned, we did complete a PEA and net present value of $556 million, and that's for an open pit mine of about production of 1.8 million ounces over a 13-year mine life, and about 142,000 ounces per year. So for us, we were kind of working last summer. It was a tough environment for junior equities. We were working with a small budget, so we realized that with the open pitable resources we identified, we felt we could move forward to a PEA. I would point out that we consider this very much a baseline PEA because it's only 45% of the mineral resource estimate we've already identified. So we have a very aggressive program this year of drilling and exploration to basically achieve a number of things. We believe the mine plan can expand very significantly. We also identified, and I'll show you, within the geological model, there are some areas that we did not yet drill. So in our economic model, there is waste. We believe at least some of that material is in fact going to be mineralized material. And so that's going to profoundly affect the economics of the project. And we also believe, as a result of our drilling this year, the Wenot deposit, which is the open pitable deposit, will also expand quite significantly. So like all projects, I think we're in great stead. We have 100% interest in this project. It is in Guyana, which is I'll talk about a bit, but it's a very mining-friendly jurisdiction. Especially since when Omai was in production, it was the heyday of economic prosperity for Guyana. So it is a project that the government and the communities want to see reopened because they know what jobs and prosperity comes from these large-scale mines. So we just recently renewed our permit, so it's good for another 3 to 5 years. So there's a lot of advantages of brownfields projects, as we all know. Now, the mill was relocated, so there's no mill on site, but the site is still cleared. In fact, one of the great things is there's road access from the capital city of Georgetown. And we'll talk a bit about Guyana, but basically there is a road that is being paved that is probably within 8 months going to be within 8 kilometers of our property. So that's really quite spectacular. Obviously the other advantages of brownfields projects, we know what the recoveries were. Historically, they were around 92%, and we can expect the same. It was a conventional milling operation, which we would expect exactly the same type of thing, with maybe a few improvements by technical innovations since the mine was shut down. So there is a hydropower plant about 150 kilometers west that has been designed and approved by the government. They are seeking funding for it. When that goes through, that would be within 30 kilometers of the Omai property, which would be amazing. We don't know what the timeline is on that, but certainly that's going to be an advantage that this property will benefit from in the future. So some of the catalysts for us, obviously, we had a strong PEA for what I'll show you is you have to consider it a super pit. It's very, very large, and we believe that deposit's going to expand quite significantly. So because it was a past producing mine and the government is enthusiastic about seeing it come back into production, we are able to advance some of the things on the permitting and other things, metallurgical test work that we believe will also, we run in parallel with the exploration to expand the mine plan and the deposit. So we did complete a financing recently, so we have about 12 million in cash. Yeah, so we talked about road access. I'll just, I won't dwell on it, but basically 165 kilometers from the capital city of Georgetown. And this is, Guyana is actually considered part of the CARICOM, the Caribbean Economic Community, and headquarters for CARICOM is in Georgetown. So this is the road, this is the main corridor road that goes by us, that goes down to Brazil. So it's been paved down to this town of Linden. And Linden is about 85, 90 kilometers north of Omai. And it was the community where the employees and the mine workers at Omai lived. And so they have skilled experience in open pit mining. Also, there's a bauxite mine there that's been there for decades. So, and it's an open pit bauxite mine. Lots of skilled labor there, very interested in jobs at Omai. And as you can imagine, once that road is fully paved, it's paved about 38 kilometers down from Linden already. I was on the road last week. But once that passes Omai, obviously, this is a very convenient operation. So you can see the road at the bottom left there, beautiful paved road. We also have an airstrip on site. And then with respect to exploration at the top right, you can see we have some of the old warehouses are still standing from the mining days. They're not the Hilton, but we've kind of repurposed them, and there is accommodation in there, and we can accommodate about 60 people, and all our core logging facilities are in there. And then on the bottom right, you can see the tailings, the old tailings facility. And we were really fortunate because about earlier this year, we got the original design plans for those. Now we knew that the dams are about 16 meters across. They were designed to be raised. But basically that facility was a very tier one constructed tailings facility. So we have had some engineers look at it. We believe there's about 2 years of capacity within that in looking at our current mine plan. But there is the ability to raise those dams. And with the original design plans, we're in good shape. There's another choice of where tailings would go. And so having alternatives is a great thing. As we all know, permitting and constructing tailings is a very expensive part of mining projects. So just turning to the deposit itself. So there's actually top right, or on the right side, you see sort of the map. We have two types of deposits on this project. There's a shear-hosted open pitable deposit called Wenot, and it historically produced about 1.4 million ounces at about a grade of about 1.5 grams per ton. Actually, in the fresh rock, the grade reconciliations were about 1.67 grams per ton. And as we all know, open pit mines these days, there's a lot of sub 1 gram deposits. And so having 1.5, 1.6 grams per ton means very robust grades for an open pit. Now, interesting, that's a shear hosted deposit we'll talk about, but just looking to the right, only 400 or 500 meters to the north is an intrusion hosted deposit. And the upper part of that actually produced 2.4 million ounces. And then there was an underlying diabase sill that, of course, they knew about. So they mined down to 250 meters, and then that's where they stopped. Now, that company was taken over by IAMGOLD in that time period, and IAMGOLD drilled 46 holes down below, knowing that this intrusive and the mineralization most likely continued down to depth, and this very late sill came in across here. So, in fact, they identified good mineralization. IAMGOLD had acquired Cambior, lots of projects, and this basically would have been underground, and they just decided it wasn't top on their priority list. And remember, the gold price was very low. So that's sort of a little prize that they left behind. And we put a resource on that. We did the work on that 2 years ago. And basically, it alone is about a 1.8 million ounce deposit at about 3.3 grams. Very, very wide zones. So last year, I mentioned we worked on a fairly tight budget, but we focused our attention on the Wenot deposit. And in fact, we added 560,000 ounces, not too bad on a tight budget. And that brings that Wenot up to about 2.4 million ounces. So, so as I mentioned, in April, we did our PEA. It's only on the Wenot deposit. We did not include the underground. A couple of reasons. One, we knew this was a milestone. We wanted to kind of show people that this project has legs. Sometimes people have preconceived notions about past producing mines. So I think this was very effective. It sort of separated us from the crowd of exploration companies. And it basically showed, it actually exceeded our expectations as well, because we just believe this is the first step for this project. And it resulted in a large super pit, and that a two-phase super pit, but it ends up being 2.4 kilometers long by about 800, 900 meters wide. And the bulk of it is actually above about 350 meters, and a couple small areas that we drilled a little deeper go down to about 440. So it's a huge pit, 142,000 ounces per year. We based this on a 9,000 ton per day plant. And in the old mine operation, they had a nameplate mill at about 20,000 tons per day, but they were putting 24,000 tons per day through this operation. So although at the current rate it optimizes at 9,000 tons per day, we don't believe that is where people will land. So with respect to the underground, what we call the Gilt Creek deposit, it's not that we don't believe it would be an economic operation. I think it probably has potential to be extremely robust. And it's just that it would have taken us more time, more money, and we moved very quickly, and we want to just keep moving. So we will be doing some work on the Gilt Creek deposit this year. Now we're a little more financially sound, but we're going to keep working forward on Wenot, because we believe that is the low-hanging fruit, and that's what's going to be the backbone of the early phases of operation at Omai. Yeah, so this is sort of just the property geology map, and it's an orogenic gold deposit. I've spent most of my career in orogenic gold deposits in Quebec and Ontario. The geology is very similar in many ways. In fact, you've got your metasedimentary deposit or lithologies. You've got your it's essentially greenstone belt of the Guyana Shield, but you're looking at the metavolcanics, and along the contact is a regional shear. And this is it's certainly the most the widest, most intense deformed shear I've encountered in my career, and it's you can see that there are multiple phases of deformation along this shear, and in fact, the scale you're looking at. Remember, I mentioned this deposit, what we've identified in our pit to date, and is about 2.5 kilometers long, quite large. But if you look across here, that's almost 500 meters. And it's made of multiple zones. And what I always say is, you can imagine the deformation. This was a wide shear that was reactivated multiple times over the years. And each time, a lot of those cracks created by the deformation, you had dikes intruding into them. And then with subsequent deformation, it would crack up some of those dikes, and other dikes intruded. So it's a great structurally prepared ground. And then the gold mineralizing fluids would come in within that and precipitate into those cracks and crevices, be it in the dikes or in that main shear contact. So we'll see a little bit of that in the section later, but along the shear contact, there is an extremely persistent quartz feldspar porphyry, a felsic dike. And we have actually stepped out and did a little bit of exploration 3 kilometers further to the east, and it's still there. So it ranges in width from 13, 15 meters to as wide as 35 meters. And it's always there because, as you can imagine, in a deformation zone, that's where that's where you're going to get the cracking and the opening up of the space most easily. We believe and we know that these zones actually continue because we've focused our attention here. But even out here near our camp, we know there's a few old holes by IM Gold, and we did 3 holes, and there are still zones out there, same to the east. So here is the Gilt Creek deposit. I mentioned that's an intrusive. I don't know how gritty we want to get on the geology, but what I say is this is very similar to a very long-term prolific gold camp in Quebec, where you see the Sigma and Lamaque deposits. Similar thing, shear-hosted deposit nearby an intrusion, also gold with gold mineralization. And what I would say is you get the shearing along here and the deformation, and you can imagine the shear and deformation going on there, multiple phases. And then you've got just 400 meters away, you've got essentially a cylindrical intrusion. And it also would have got kind of torqued with some of that structural movement. And it broke subhorizontally. So we know from age dating that the gold mineralization is exactly the same era, same age. And that's because, the gold mineralizing fluids, they just flow through any crack and crevice they can find. So Gilt Creek, this intrusion, actually, we mentioned in the top 250 meters already produced 2.4 million ounces. So we do have, I'll talk briefly, but you can see there are these other structures here. And these are sort of gash structures, maybe related when the intrusion came in and kind of, almost the enforced intrusion into the metavolcanics there. And these are likely related to that. But so they're narrower, but what happens is the gold mineralizing fluids also went into those cracks and crevices, much higher grade. So those are really interesting targets because they come to surface. We can see them at surface. We can trench them. Narrow, higher grade, beautiful things if you can put them through your mill in the early stages of your mine. So, yeah. So talking about Guyana, I'm not sure. Most people have probably heard by now that there's a huge oil boom. Discovery of offshore oil in Guyana in 2015, and it is just an Exxon consortium, and it's just growing and growing. And at this point in time, they're projecting that by 2027, the GDP per capita in Guyana is going to exceed anywhere in the world. Now, one thing to remember is the population of Guyana is only around 850,000. So not a lot of people and a lot of offshore oil potential. So that is changing the country very quickly. But the country has a long history of gold mining. It's not just Omai. There's like 50,000 small scale miners in Guyana. And so they call them pork knockers. I think it's a Dutch word from nearby in Suriname, but they are very prolific. 50,000 small scale miners in a country of 800,000 people. So it is a culture of gold mining, and so the government does, and also with the history of Omai, they remember the good jobs and the prosperity it brought, and also offshore oil is very different from mines in the interior. We all know when you develop a mine in the interior, you bring in infrastructure, it's jobs for people in the hinterland. These are great benefits to a country like Guyana, and they realize it. So, in a small country, you get to know people. I've met with the president. You can meet with a lot of FaceTime with the government people, and they have a vested interest in mining. So it's a good jurisdiction to work with. Yeah, we already talked a bit about the geology. So I guess you can see in the top right there, that's the 2 pits that were in production previously. And there's the Gilt Creek deposit that was on the intrusion. And then the other one is the Wenot. And that's what we focused on. And why it's worth looking at that picture is that's actually a pretty narrow pit. And down in the narrowest parts, like barely 50 meters. And just remember, during the time when that was in production, the gold price kept falling. It fell actually down to, I think, a little bit below $300 an ounce. And so I know many people that worked in the mine. I've got to know a lot of them, and they'll tell you that every time the gold price fell, you know, they would just come in and in and in into just the best of the zones. So this is why, you know, a lot of people think when you're working on a past producing mine that you're just going deeper. But in our case, remember, I mentioned this shear with all these zones is 400, 500 meters wide at the widest. So a lot of the zones are actually in these adjacent areas that were never mined. So when we do a layback and do a bigger pit, all of those zones are actually near surface. Yeah, so this is just looking at the long section again. So you're looking sideways at the deposit. And you can see these are pretty good grades. And I don't think you can see the scale down there, but the purple is actually over 5 grams. And I think the red is over 3 grams. So you can even see from this, the yellow is the lowest grade. I'm sorry, I can't see the grade. I think it's 0.3 to 1 gram. So you can actually get the sense, even from this, that the grades actually increase with depth, and that's what you want to see. In fact, the deepest hole we drilled is one we drilled last year, and it's about a 440-meter depth. And that hole hit 5.818 grams per ton over 20.2 meters, and within that, 12.7 grams over 7.9 meters. The takeaway from that is, like, those are underground grades. So what it tells you is, even if you take your economic pit, your open pit, down to a certain level, there's at least a couple zones that you can probably do a decline and go underground on. So that means, you know, more mine life, more mine life, more mine life. So, and on the edges, you can see there are areas we haven't drilled yet on the flanks at deeper depth. So we have a lot to do, and we believe this can expand quite significantly. Yeah, so this is our 3D sort of look at the deposit, and I wanted to show you one reason why we think that we can expand the resource for the open pit, but also improve the economics. So you're looking at, you can sort of see the sheets, because these are subvertical zones within that shear, that deformation zone. They were subvertical breaks near vertical, and that's where the gold mineralization came in. So again, typical of what you would see in Quebec or Ontario. So in here, there's these gaps, and this is because we didn't drill from the south side of the pit. There was some sands, and we were concerned previous people had some issues drilling through the sand areas. So we've now done that this year, and in fact, we did a press release yesterday of the first holes from the south, and they were quite impressive. So we're happy we can do that now. In the bottom, you can see the economic pit. And so one thing to note about the economic pit is it contains some of those gaps. So what that means is when we do the economics, we're pretty comfortable. You can see how these sheets just stop, and that's because there's no drilling in here. Same at the end. These just go vertical because there's no drilling beyond that. So we believe that some of these zones that got included in our economic study as waste, so in other words, a cost, are in fact going to prove to be mineralized material or ore. And why that has profound impact on the economics is if we drill that and prove in our next iteration of our next resource in PEA or PFS that is in fact mineralized material, then it goes from being a cost, not even to neutral, but to being a revenue. So that will boost our net present value, and it will bring our strip ratio down. So that's a really high impact activity for us, and we've started to do that. And happy to say that we now have 2 holes without a glitch from the south side. We dealt with the sand, did not seem to be an issue for our drillers. So we're on the path. The other key takeaway here, you see the economic pit. And of course, they put a lot of parameters on that. You can see that, in fact, it didn't incorporate a whole bunch of our 43-101 mineral resource estimate. So you'll remember I mentioned Wenot is 2.4 million ounces. only 1.9 million ounces met the economic criteria at that point in time. So we know that there's another almost 500,000 ounces, and they average over 2 grams that didn't get into the pit. And you can see that they hang down below and up on the side. And over here, we did a lot of drilling last year, very, very successful, but not enough drill density and not enough close to surface. And we didn't close it off, so it didn't meet the economic criteria. So that's a priority for us as well. Yeah, so this was just something our team worked up to figure out how to have, we raised the 13 million. How do we make that have the most impact possible on this project? So basically the PEA is down here with our 1.9 million ounces from the 43-101. So as I mentioned, the gaps are an area that we believe is low-hanging fruit, and it will have impact on the economics. This is the B, that's the area. It's already in our resource estimate. We need to do some additional drilling to get it into the economic pit. So we assume at least some of that will work. The C we'll talk about in a minute, but that's those high-grade zones we talked about that are in the cracks around the intrusion. And then we have other ways of expanding. And then out here is the other deposit. So what you see up the left axis is sort of our target, and why we believe that we can take this from our baseline PEA into a much larger mine plan for when we move this project to a PFS. This is just, I am an exploration geologist, so I must admit when we've been working, Wenot was low-hanging fruit. It came together quickly. The geology is relatively simple, lots of gold mineralized zones. For a small company, it made sense. We have poked around at some of the other targets on the property. It's obviously between what was mined and what we have, it's already 8 million ounces. So this is a gold camp. I just say, like down at the right, there's certain areas that intrigue us, but we've been just focused on Wenot. You can see that's one of the places on the bottom right there where the artisanal miners have been working, and they just work on that superficial material and the saprolite, and basically there's a lot of mines in the Guyana Shield where companies go in and they drill under the areas where the local miners are mining the saprolite, because often that's where you find a deposit. So you can see the Wenot way down there in the distance. We're kind of along strike and off to the side. But again, this is kind of intriguing. We have targets like that we just have not put as a higher priority than getting on with Wenot. So these are, I wasn't going to really go into these, but I mentioned some of the high grade targets. So these are these cracks around the fracture systems around that intrusion. So Snake Pond and Blueberry Hill are two areas where we've trenched, and we can actually see relatively high grade mineralization near surface. Snake Pond, there was an old hole drilled by a former company way back in the early 1990s, and they got 6.9 grams over 21 meters immediately below the saprolite, so starting at like 30 meters. So we drilled a hole last year, and we intersected about 7.8 grams over 9.5 meters, just down 50 to 100 meters. So these would be like potential for early mill feed to really boost the economics in that first year. So what we're going to look at next is just up at Blueberry Hill. So you have a little picture of the landscape. Yeah, so this is Blueberry Hill. You can see out here, and you can see these flat lying veins right in the saprolite. And this is just oxidized rock that you see in a lot of high rainfall countries. So places like Guyana, we have about just over 2 meters of rain a year. And so the rock basically just weathers into this red saprolite. So we found a diorite intrusion. We trenched it, and when we trenched down, we actually found an old mine opening. And so inside you can see the flat lying veins in the fresh rock. And so we did a few drill holes up there, and you get actually fairly coarse gold in these veins. So again, this is not the big Wenot open pit, but if, like, for example, here where we're sampling, You usually get well north of 10 grams per ton. So again, that's huge potential for early stage mill feed. And for places like this, you don't even have to blast it. So you could even do stockpiling of that while you're building the mill. So these things, again, we're building the resource, but we always have in our mind, how do you build the potentially the largest and most robust economic mine plan. So not to be underestimated, this is the intrusive hosted deposit. And you can see on the bottom right, again, that's that pit up at the top. And this is actually what the mine was built for, because people have been poking, like local people, Anaconda, which was a big American copper company, was down here in 1947, put a little shaft just on the side of this. So people knew about this, and this, so this was a well-known deposit. Wenot was an afterthought, and that's why it's surprising to some how big that system is. So this deposit does continue at depth. There's another similar type deposit that this is known as the Omai stock. And there's another one in country at the Aurora mine. And it's much narrower, but it's known to go down to 2 kilometers. So as you expect, intrusions have deep roots. And in this, it's the mineralization likely continues for considerable depth. So what's the controlling factor is really going to be the economics. How deep can you economically mine? So this is not that deep. The point here is about 300 meters depth. And from point to point in this deposit, north-south here, it's about 500 meters. So it's quite sizable. You can see, I mentioned that this was broken subhorizontally, like horizontally. So the mineralized zones are, in fact, almost horizontal. So a different kind of deposit, and flat-lying deposits, that we don't tend to see those in our Quebec, Ontario mines. A little bit different mining methods have to be looked at. But if you look at some of these zones, they're like 100 meters or over 100 meters in some cases. So this is going to be, at least very large stope mining, think more conceptually like, potash or something like that. It's possibly bulk mineable. When you have this kind of density of mineralization in these wide zones, you can look at bulk mining. So, so we were quite enthused about this. We were enthused about it, as were some of our company advisors that have a lot of experience in developing underground mines. We were enthused when the gold price was $1,800, so we're very enthused at a $2,500 gold price. So, and just so you can see the rock there. There are some very high grade sections, like that little sample of core that was there. It was running 2,400 grams per ton over a meter. So we are likely going to put a couple drill holes into this year to do metallurgical work and some, rock mechanic type investigations into it. But like 2/3 of this are already in the indicated category. So it is fairly well drilled. Now we could continue at depth. The deepest hole went down to about 960 meters. And remember, this starts at about 300. So that's still a very sizable swath there. So some people kind of have earmark certain things saying, oh, if you're underground, you should be over 5 grams or over 6 grams. Remember, those zones are very wide. And so how you do an economic assessment, you have to select a cutoff grade that reflects the mine method. So with some very learned people in these types of deposits, we set the cutoff grade at 1.5. And so you can see in the center, that's our base case. That was what drove our resource. And the blue is indicated, the gray is inferred. So it's an average grade of about 3.4 for 1.8 million ounces. So just for people who say, well, you want to see higher grades. So you can actually ramp the cutoff grade up to 2.75. And you can see, you lose some ounces, but you're still over 1 million ounces, and your grade comes out to over 5 grams. So you wouldn't do that. You would always optimize. And just remember, this resource was done when gold was, I think we did this at a $1,750 or $1,800 gold price. So again, the takeaway really is how robust this deposit is. Yeah, so this is just sort of our plan for the year, and this was our obviously we're still a junior. We think, when we raised 13 million, we know what we did last year with a very small budget. Our costs are relatively low. We have very little overhead. For me, it is all about like move the project forward, and that's I spend quite a bit, excuse me, quite a bit of time at the project. Lost my voice. Sorry. So I lost it. Yeah. So, whoa, never have that happen. Right. So basically, this is sort of this highlights our plan and our approach going forward. Obviously, some high impact drilling. Um, the PEA actually helped us identify which areas are going to have the most impact and accelerate that mine plan. Ideally, we understand, a 13-year mine life is fine, but for big projects like this, you want to see a 20-plus-year mine life, and we think that there's ample potential for that. So Gilt Creek, yes, we are planning to do some drilling. I think before year end, we have 2 drills on the property currently. They're focused on Wenot, but we will probably either bring in a 3rd drill or allocate one of those to do a couple drill holes on the Gilt Creek deposit this year. Then we've also started on the engineering studies. We've done some baseline water studies last year and some flora and fauna studies. So we'll keep moving forward. We have certain permits in with the EPA, and the EPA is well familiar with the Omai project, and so they feel that the baseline studies that were done and the reclamation of the mine by IAMGOLD, they're very comfortable. They've been out there and inspected the project before. They're very familiar with the project, so we don't see any hurdles there. And in fact, compared to a place like Canada or the U.S., permitting in Guyana is going to be quite efficient. Yeah, so that's us. My board is made up of some real veterans in the mining industry. Um, Don Dudek's a great exploration geologist. He spent a lot of time in West Africa, and a lot of people, as they know, the geology of the West African gold projects is analogous, and one can argue the same because of plate tectonic pull apart. And so his input on our project has been very valuable. Derek McPherson. He's a metallurgist, but mostly he was an investment banker and analyst. And Nadine is a tailings engineer and entrepreneur. And Lon Shaver he was an investment banker, but he's the president of Silvercorp. So, and Renaud Adams, who's now at IAMGOLD, the CEO at IAMGOLD, he was the chairman here. And he and I have been through a few adventures, both with Richmont Mines and at IAMGOLD. So we know each other well, and he has tremendous expertise in developing mines. So we tap into him quite often. So in our financing, I guess I would mention that we were really pleased on our financing for 13 million. It was a broker deal with Paradigm, and we got in 11 funds, including Franklin Templeton, Rothschilds out of Paris, Phoenix Sun. And I think that speaks also to the fact that we've kind of got this project to a place where people can see it has a path forward to production. Yeah. So with respect to our shares, we trade on the Venture Exchange and on the OTCQB. We have a market cap. I think this might be a little. It's about out of date. Yeah, our market cap is about 80 million Canadian. So we're still trading at about $15 an ounce. There was a company in Guyana with a very remote project, but they recently were taken over, I think, at about a valuation of about $200 an ounce without a PEA. So we just consider that this project is certainly should be head to head with that project, and so a lot of upside. Anyway, that's us, and hopefully a good landing point to take off from.
I mean, you kind of told quite a bit about your story, but I think it would be interesting, especially to hear about your time with Renault previously, and you speak a bit more about your career and how that kind of transitioned over into Omai, how you came to work with this project. You could just tell that story before we get on with it.
Right. Well, like a lot of exploration geologists, it's kind of called the random walk of life. So yeah, no, I spent quite a few years. I spent about 10 years in exploration, mostly in gold, some base metals, uranium. But I guess I always say for exploration geologists in the downturns, if you want to stay in the business, you have to kind of reinvent yourself again and again. So I did a stint with government. During one of the downturns. I often worked for majors in the downturns, but I find like the true excitement is working for exploration companies. So um, I guess I guess my other uniqueness is just after Briex, it looked like it was going to be a rocky road for mining, which it was. And so I actually joined the Toronto Stock Exchange about 2 weeks, 3 weeks after Briex, and thought I'd be there for a couple of years, and I ended up staying for 8 years. So that was an interesting venture, of course, to get to know all of the mining companies and worked on the new disclosure requirements and everything from the inside out. But yeah, so I guess I joined IM Gold, and that's where I first met Renault. Yes, I went to IM Gold around 2008 and went down to Roosevelt quite often because, of course, Renault was the general manager there. So got to know him quite well. And then I was on the board of Richmont Mines from 2010, and when it was a fairly small little producer with a couple of struggling small mines, including the Island Gold mine up at Wawa. And we were only mining sort of the top 300 meters. And that was, we were profitable some quarters and not so much other quarters. And it looked like the mine was near the end. And so basically, we drilled, I think there was an initial 12 holes under the mine. And lo and behold, the mineralization continued and was much more robust. And the rest is history. So the Island Gold Mine now is 6 million ounces, at over 10 grams per ton. Spectacular operation. So I stepped in as the interim CEO in 2014, and I actually started the deep drilling under the Island Gold deposit. And it was kind of the, what I call the no guts, no glory holes. So we hit mineralization 500 meters down plunge from the deposit. Um, and so the rest is kind of history. So when I was the interim CEO, but of course I'm exploration. I'm not really a mine builder, mine developer. I knew Renault. He was the right choice for the company, so he came in and just blasted forward to develop Island Gold, and we were taken over by Alamos 3 years later for almost $1 billion. So yeah, we had an interesting ride there. I'm still on the board of Alamos, actually, so it's a great joy to have seen a project like Island. Uh, I've seen it since 2010, and it's now, I think it's ranked as one of the top four mining underground mines in Canada, right? So, and more to come. So Renault actually, he went on to do other things. We always kept in touch. He stepped in as the chairman of Omai right when it was going public in 2020, and reached out, and I joined the board. And a couple months later, they put me in as the CEO because really this project needed an exploration person. So Renault is now the CEO of IM Gold, and sort of time constraints. He's no longer our chairman, but he's an advisor and a great resource for us. It's a good complement to the skills we have because, with a past producer, you always, for any project with 4.3 million ounces, you have to start thinking like, what's the mine going to look like, right?
Hmm. Yeah, it's quite interesting. We'll see if IM Gold is interested in being the owners of this once again in a few years from now. Who knows? But so just set the stage. I guess let's just talk about the team. I know you've hired a few new people, but can you just tell the on the ground story? I mean, what's the team look like, Doma, currently?
Yeah, it's a fairly small team, to be honest. Like to date, I've really been the VPX as well. So we have Jason Brewster as our COO, and he's a mining engineer. But I always say he has the heart of an exploration geologist. His father is, and so I think he always tells me he spent by the time he was 14, he was sweeping floors in a core shack. So, so he's an integral part of the team. Recently, we took on a geologist out of Belgium who's done a lot of work, Pascal Van Osta, done a lot of work in West Africa, taking projects from basically where we are through to sort of PFSs. So the right skill set. And so happy to have him on board. We have Andreas Rincon is with us, and he's a geologist. He's out of Colombia, did a lot of work with B2 Gold, and he's been with us for 3 years. So he's kind of a great thinker, and lots of really solid ideas from him. And so he's been important. I mean that's essentially been the team. And then I took on another mining engineer fellow who he actually graduated from university in Guyana, and his first job was at the Omai mine. And so I met him, and he has an interesting background too. He ended up working for Barrick in Tanzania. I think he worked in the Philippines at an operation, and then he was the chief engineer at the Detour mine here in Ontario. And we would aspire to be as large as Detour, but it is essentially the same. It's a very large open pit operation, so orogenic gold. So he lives in Guyana now, so it's great because, of course, he knows a lot of people in Guyana. So he's sort of our man on the ground on the PR front, as well as moving forward on some of our engineering studies.
Yeah, so in terms of sort of alignment, we always like to ask, personally for yourself, what kind of ownership do you have in the company, and more broadly, the key people within the company? How do you work or how do you structure their contracts to incentivize them to drive shareholder value?
Yeah, so basically, I only have, I think I have like 3.5 million shares or something like that, and obviously stock options. Salary is relatively modest, certainly relative to any larger companies, but certainly even in the small space. I guess, I've started companies before, and I kind of had said, I usually believe that, if you're the founder of the company, it's better. But, and that's sort of been my background. I've been on the board of, I think, 15 or 16 companies, half of those from the time they were private through to going public. And I guess one of the things is this was a unique opportunity, I have to say. For me, I am an exploration junkie. And as an exploration junkie, I looked at this project and I just went, you just took a look at Wenot and what had been drilled. And I just said, let me look at the data, but this looks fairly easy. And as you know, there's nothing easy in any business, and there's certainly nothing easy in mining or exploration. But the reality is, on a very limited budget, in 3 years, we went from nothing to 4.3 million ounces. And to be very specific, Wenot had nothing. And all of our drilling identified the 2.4 million ounces in Wenot. So this was a unique opportunity. So I hate to say it, but I am like a lot of geologists, that it's not entirely about the money in the pocket. It's the rewards of the project. And as a geologist, I will say the other strange thing is I always wanted to work overseas. Always wanted to work overseas in an English-speaking country because I have no language skills. And so it was kind of one of those things that, I was mostly doing board work, very selective consulting, often for people I knew. And I just, it was Renault. I saw this opportunity, and it wasn't all about making big bags of money. It was just the rewards of seeing a project like this advance. And I would say that a lot of the people working on the team, they're very similar. And I think what's great about Omai is people look at this project, and right out of the gate, they just say, "Oh, I want to work on this." So we do. I guess to that, you'd asked me about the team. Actually, a couple of weeks ago, a fellow, Josh Bailey, he was a senior person in BHP's exploration team, and he left BHP, and I took him out for a drink, and I said, well, you could always join a a little exploration company. He said, well, I've been following Omai, and I don't think he knows what his long-term future is. I think it's going to be impressive, but he's joined on to work with me for, the next 4 months at least. So he's been a beacon, and he joined for the same reason. He looked at this and went, this is awesome. He and I were down at the project last week, and again, he's, kind of, he should put in his own words, but he's kind of, shocked by the potential upside of this project. So it is fun. So fun counts.
So yeah. So and I've heard that a lot with the geologists. It's about the excitement and the glory in the rocks. I guess is a main driver as well. So in terms of your shareholder structure, I mean, you have Lon on the board, who we know, and most of people know at this point. So Silvercorp made an investment quite some time ago, and then you have Sandstorm as well. Can you just give the background to those two corporate investors?
Yeah, and so Silvercorp came in when this was a private company in early 2020. And so the previous management team, they were just trying to figure out how to do a reverse takeover and what they were going to do. And what happened was Guyana Goldfields held the Aurora Gold Project in Guyana, and Silvercorp put in a takeover bid on them. And then they were overbid by Zijin. And so there was actually a break fee. So the people who were running the private company for Omai before it went public, they realized there was this break fee. So they just got on the phoned Silvercorp and basically said, sounds like you did your due diligence on Guyana. If you like that, take a look at this. And Silvercorp put some money in. So that one was fairly obvious. And so actually Lon Shaver is on the board, and he was originally a nominee director for Silvercorp. He's currently the president of Silvercorp. And so although they've diluted down below 10%, Lon is still on the board, very, very strong director. I've known him for 20, 25 years. We want to keep him. And so, yeah, he's a great member of the board. And then for Sandstorm, just when the company went public, again, before my time, I think they wanted to just boost the coffers, so they sold Sandstorm a 1% royalty. So that's still outstanding. So that was just kind of concurrent with the going public transaction.
And now you have just below 30% institutional holding as well after the last raise, right?
Yeah, at least that. And most of our shareholder base are high net worths. That might be characteristic of a lot of companies these days. So what is nice is, for example, we did the private placement we did in June. There was no warrant attached, and that's always nice. So our warrant dilution is very minimal. And it also speaks sort of to where they see the company going. I think the other thing, it means that when you've got 11 institutions in it, it's over 90% of the financing, that after that 4-month hold period, there's not going to be a dumping. Right. Yeah. So yeah.
I mean, it sounds like, you have line of sight to maybe more than half of the shareholders within maybe you'll contact 10 to 20 entities or people, and you'll be able to contact more than half of the shareholder base, which is always good. So you have a good line of sight in that regard. And then in terms of your financial positions, you said that you are currently sitting with 12 million Canadian in cash. Is that right?
Right.
Quite, and that's very current. Is that correct?
Yes. Yep.
And do you guys have any other liabilities on the balance sheet at all, or is it clean cut in that regard?
No, you'll see there's I think in the liability things it's just I think my expense reports that I haven't filed. So there was one outstanding bill from the previous management that nobody's ever come after, but I think the accountants say that we have to keep it there in perpetuity, basically. So yeah, no, we have nothing owed. And no debt.
And then just to give people some sense, just with what would the burn rate be for you guys? Say that you don't drill, you just maintain the team and kind of don't do much activity, just kind of baseline cost structure for the business right now. What's the sense on an annual basis?
Yeah, it'd be under 100,000 a month.
Okay, right.
Yeah.
And then if we just speak about the sort of the drilling metrics for you guys in Guyana, so what's the approximate cost you guys are running at per meter now? Or these last few holes you released now, for example, how much do you have to pay for
Yeah, we're apparently quite envious. I was speaking with a friend who's drilling in Nevada. Yeah, our actual drill costs, like all in, are about 225 a meter, and that includes assaying and all the manpower, etc.
Is that American dollars or Canadian dollars?
U.S. Yeah, U.S.
US.
Yeah, everything is U.S. dollars essentially in Guyana, although they have their own currency. Yeah, so we're drilling right now. We just switched drill companies, so we're with Orbit. We're drilling about 2,000 meters per drill per month, so quite fast. But we're ready for it. Like we have a lot of targets, so we're not a problem. But so we just brought a second drill in about 2 weeks ago, which is part of why I went down there. So we're going to be doing about 4,000 meters a month, but in a lot of ways it's better that way because your overhead costs per meter go way down. So historically we've been doing about 225 a meter. It's probably going to come down a little bit even from that, just because of that. Um, we've been adding quite a few geotechs to the team and things like that, just to, your data is important and everything, so it's the primary thing. You got to make sure that when you add drills and you're drilling more, that the quality of your work doesn't go down. So we're fairly fortunate in Guyana. As I said, there is a mining culture for sure. So like some of our geotechs have 15, almost 20 years experience. Like they're super fantastic geotechs. I've never worked with a team like that. We've had a lot of geologists who come into site and they're there for one day and they basically say that, they're the best geotechs they've ever worked with. So yeah, we're very lucky from that perspective. And the Guyanese, they love their jobs. They work really hard and they're really good people. So yeah, it's been a very positive experience. So from a cost perspective, I mean, I think, as I said, we're going to be drilling with two drills right through to Christmas. So we're going to be looking at, from here on, that's 4,000 meters. So we're going to do like another 12,000 meters probably before Christmas, I would estimate. So we may be in a position, like we were just sort of reassessing that, we may be in a position that we do want to do an updated mineral resource estimate, because I think some of the drilling we're doing, it's going to add it has the potential to add quite a few ounces.
Yeah, it's if you continue doing like these holes you released yesterday, will be or Friday the 6th here, 6th of September. That was that's really significant, obviously. So the drillers are doing very fine. I mean, they've done holes that your last drilling partner said that that could not be done. They drilled through the sands with good advance rates. You're saying 2,000 meters a month, so let's say 60, 70 meters per day. Very good. So it's going swiftly in that regard. What kind of turnover rates do you guys have with the lab? Is it that like 4 or 6 weeks, or what's the?
No, actually, better than that. So there's two labs in Georgetown. So it's great. We just truck them to there, and when we truck comes into town and takes them straight to the lab. Um, so the turnaround time, I would say, isn't bad. It's, as you know, I mean, you get your core, you have to log it, cut it, sample it. So there's still a lag time in actually just processing it at site and then getting it to the lab. So we're down to taking batches already every 2 weeks to the lab. I would say 2 to 3 weeks. 3 weeks is realistic. But what happens is, I remember the first hole we drilled last year, we had 218 places where there was visible gold. So in one hole. So what we do is, if we see visible gold, we automatically have them make a larger. They pulverize a larger sample, because this speeds it up, Gorm. Because if you wait till the first one comes back, and then you have to redo it, then you got another 2 weeks or another week. So what we do is we earmark all the visible gold, and we run two large pulverized pulps from the original sample right out of the gate. So that speeds everything up. But like, for example, I was hoping to get we got our results out yesterday morning on Friday. I was hoping to get them out on Wednesday because I'd asked the lab to move a little faster, and they always accommodate. But what happens is anything over 3 grams on the original it triggers a different analytical method. They do a gravimetric finish. And so those take extra time. So I already knew on Tuesday and Wednesday when they said that they were going to take some extra time. I already guessed it was because there were a lot of gravimetrics, which means that's a lot of samples over 3 grams, which is a good thing. So, yes. So I would say, yeah, I mean, we try for 3 weeks out of the lab, but when there's a lot of visible gold, which is a good thing, it can be a little longer.
So before we move on to the exploration and kind of recap that or go over that again, the kind of the key ideas you guys have, why don't you kind of say at this point in time, how do you envision the budget to spend? You highlighted in the slides like $6 to $7 million Canadian in spend, but now you also released these recent results, and you indicated you want to double the drilling on a shorter time frame. But let's say, I mean, this point in time, what's the budget? Say for end to 2025, or how are you budgeting currently?
Yeah, so basically, we're budgeting sort of in the 6 month time frame, and the way we've done it all the time is towards the next milestone. So we have been assessing, what's the most logical milestone since our financing, and we are working towards a PFS, like a preliminary feasibility study. But clearly, with the drilling we're doing, it's going to be done on a much larger resource, or we expect it to be on a larger resource. So basically, we're budgeting for 6 months because we see that as our next main milestone, which is most likely the updated resource estimate. And so, with the drilling, as you can imagine, it's, even with 2 drills, it's not, even in Canadian dollars, it's about $1.5 million a month. And so we have ample funds to move us forward to that next milestone of the resource. So we will start to do a bit of metallurgical work as well. So there are some other things. We're working on permitting. We're working on more baseline water studies. But as you can imagine, those are relatively low cost items. That type of work. So the big ticket is really the drilling. And so even with 2 or 3 drills, we still have funds for a good 10 or 12 months, even at a very accelerated drilling rate.
Yeah. So, I mean, let's say that you guys, I mean, we're gonna be in February or March or something like that. You update the resource. It's looking really good. Of course, you'll take the opportunity to raise some more funds on the back of that to continue and potentially make another step change move to accelerate, bring in 4 rigs or what have you. I mean, can you just outline how you might be thinking about that? Of course, it's ever changing and always in flux, but that would be my feeling of a potential strategy.
Well, I would say that I'm really an anti-dilution person, so I'm going to step back and say we didn't do a financing in 2023. It wasn't that we didn't need the money. We probably on exploration spent $3 million last year and had 560,000 ounces. It's tough to run a company like that, but our stock hit a low of I think 4.5 cents in October, and I wasn't going to finance at that level. Actually, I was offered money in May of last year after I went to the UK, and I think we were trading at 6 cents, and it was just too painful to finance at that level. So I felt that we could get to the next milestone and to the PEA with what we had, and we did. So we didn't finance in 2023. So I mean, again, we did the recent financing at 12 cents. I think that with the funds on hand, we have the ability to significantly create value with the funds we have on hand before we have to do a subsequent financing. So I mean, yeah.
Obviously, you'll get to the resource. You can do, I mean, depending on when you want to do it. That's quite obvious. But the PFS, that might be a bit of a stretch. Is that fair to say? I mean, would you likely have to raise more funds prior to the PFS?
Probably. In my mind, I mean, we saw sort of a preliminary workup of a budget with our QP, but to me, it was a little skinny. So yeah, you're correct. It's always a question when you run juniors, how do you create the best value for shareholders, right? I mean, it's a big question. And that's why we have a lot of places where we could work. And we basically did an exercise sort of looking at what's going to create the most value towards the company as a whole. So I do think we're, yeah. So I'm on a separate bent. I think we're coming out of sort of the dark time, the dark ages, for this company anyway, because there was a lot of skepticism, I'll tell you, and to me it was just I faced that. Everybody faces that in their career, so I was just like we all live in a prove it world, and so we had to prove it. You know, I have some analysts who told me they had zero interest in Omai, and then they said, "Oh, this looks interesting, and this looks more interesting." So you have to get through the milestones. But we've got through very tangible milestones on this project. So we have incoming inquiries on the project. We're getting some attention. We're getting good results. So I think we've turned the corner. Now we all know, and I'm sure you know more than I do, that the junior mining, the junior gold equities, junior equities in general, they're the disconnect between the gold stocks and the gold price is ridiculous. But I can't affect that. I can't affect achieving milestones. So I mean, I think that we now are being recognized as a significant project that has the legs to go through to production, and I think based on that we're going to get a bump up in our valuation just by there's a time lag, but the PEA, the resource, I'm going to Beaver Creek next week, a full agenda of meetings, and I think just people kicking the tires and saying, oh, I get it, this can work. And I think that's going to help us. So it doesn't directly answer your question, but I don't I can make money go a long way, and I think what we have in the bank is going to get us through to a very tangible place, so that I don't see our financing in the future starting with a one. So
Yeah, no, I think it's quite clear that the bank for your, I mean, the amount of ounces of coal that you've been able to generate with the amount of funds spent last year and also the prior years is extraordinary. So now when the kind of the past perception of I assume the previous people who managed Omai and gave it a bad rep for some reason in the market, now when that's been lifted and you've actually reached critical mass in terms of market cap, I'm not at all concerned about it. I'm just interested to hear your reasoning on the timing. And obviously, it sounds like you have a very sound reasoning in terms of dilution. But we'll get back to this a little bit later after we've discussed the geology, to kind of touch on when you think it makes sense to potentially transact. You're a geologist, as you say, so at some point this is going to be transacted. So most likely, at least. So we'll get back to that. But let's jump into the exploration segment. Let's start with point A as outlined in the one of the slides here presentation. So the gap zones that you just drilled, I think it was 3 or 4 holes now that had excellent grade from the south side that addressed some of these gaps. But can you just kind of speak to the quantum of minerals that you could, as you say, replace from being a cost or waste in the strip ratio to being actually revenue bearing or significantly cash flow producing, as we saw with these holes that you now produced on the 6th of September. So can you just
right.
speak a bit more in depth to the gap zones potential?
Yeah, so where we've started drilling is, of course, the gap zones, and they're located just on the south side of the Wenot deposit. And so you can actually see where some of these zones extend, and then you can see these ones here just sort of dislocated where there's been a couple drill holes. But basically between here and here, that was 750 meters along the south side of the deposit, all that fit into the economic model, but had seen no drilling. So these are the first 2 holes that we've done here. Again, you can actually see those gaps and see how that area wasn't drilled. That's obviously important because that's going to be part of any open pit scenario. And if we can convert some of that in from waste to ore, essentially, that's a big win. You can see here, even to the east end here, that's about 300 meters. Again, no drilling at all. And we believe we're going to pick up at least some zones. And that's areas that are in the pit. We also started doing some drilling at the East Wenot because we do know these zones continue. It doesn't seem to date, we don't have a ton of drilling out there, but it doesn't seem like we're going to get like the 10, 15 zones across here, but there's very little drilling, and we need to do some systematic drilling this year. So another area that's kind of intriguing is these northeast splays. We now know and also going through some of the old production holes, that there were a number of zones that come out as splays here. And whenever you have a shear, it's very common to have splays come off a shear. I think somebody was telling me like the Lucky Friday deposit, which is a huge US mine, they actually were mining the splays for decade after decade before they realized they were just splays off the main zone. So what we like about these is there's your past producing pit, and these ones would be outside of even that. So you know these are all shallow. And again, when you start your layback on a new pit, you're going to be picking up mineralized material. So we will drill those. We don't know if they're going to be as rich in grade as sort of when you're around that central shear. But certainly the fact they would be shallow, they're kind of, again, good room for expansion. We're also going to do some drilling here. Now, out at this end, we did a lot of that's where we focused our drilling last year, because again, it's outside the past producing pit completely. And we identified in the resource, there's actually 900,000 ounces out there. You can see there's some gaps here as well. Again, we didn't drill shallow, and we still have not drilled. You can see the drilling kind of ends there. Where does it go? We need to step out there. We think there's a little bit of an inflection, but we don't know. So again, we're going to do some drilling out here.
To give the gap zones justice and really find out what you have there, because you indicate you might, an exploration target there is like 300 to 700,000 ounces or something like this. So can you just clarify why you can see that, and how many meters you think you need to attribute to give it justice, and figure out what you actually got to the gap zones?
Right. I guess, it's difficult to quantify. And of course, we're not supposed to, under 43-101, and I'm a QP, we're not allowed to really speculate too much. But I mean, I think along the whole extent of this, and it depends what level you're talking, but down to about our 350 meter level, I think we can reasonably expect, well north of 200,000 ounces, up to maybe 600,000 or 700,000 ounces actually. Yeah, so it's an important area, but as I said, it's extremely important because it is going to go into your pit as waste otherwise. So it's a big bonus, just identifying it. So I would say, easily 200, 300,000 ounces, and potential for much more. And also, geologically, this area, if you look at them when they were in production, what's interesting is in the models, the geological models, they actually have no mineralization on the sediment side. They have all of the cartoons show all the zones stop at that contact, which clearly is not the case. And in fact, there is some evidence that they were mining some of the stuff into the sediments. So I think it was just sort of it went in, but as you saw from the picture of the pit, they were just narrowing into the highest grade zone.
And would you expect to be able to sort of prove this out in enough to be able to prove these gap zones out into the next resource that might be coming in Q1 next year, potentially, if you decide to make that resource update?
Yeah, absolutely. Because for us, for the resource, for the inferred ounces, the drill spacing is actually 150 meters. For the indicated, it's 50 meters. So these two holes that we did are 300 meters apart. And so what we'll do is we have another hole planned both west and east of there. Our approach is basically you do a couple holes or 3 or 4 holes, and then you wait for the assays, because you do a lot of interpretive work. You learn so much from each hole, especially when there's so much real estate here to drill. So yeah, we will continue drilling, and certainly at the 150 meter spacing, we'll be able to bring them into inferred, and we may be able to bring some of those into the indicated. So yeah, I think that's a very easy thing for us to do before the next resource.
Yeah, and that's going to be then a couple of thousand meters and more to do that, like 2, 3, 4 or something like this. That will be 2 months or 1.5 months, 6 weeks of focus from the rigs.
Yeah, with the speed we're drilling right now, it's not bad at all. Like one of those holes only takes about I think just over a week to complete. So they're pretty quick. So this next, yep.
Yeah. And then secondarily, I guess next to speak to is the inferred inventory that is not included in the resource currently that you mentioned as well. That are sitting around just shy of 500,000 ounces with about 2 grams. Can you just explain what needs to be done or how you will incorporate that in the next resource.
Right. So a lot of the work we did last year was extremely successful out here. As I said, we added the 560,000 ounces were almost all added out here. And I mean, we had our first hole last year out there hit actually 31 meters running 4.07 grams per ton in the sediment. So these were really exciting holes. And we were trying to keep stepping out. So we didn't do the shallow drilling. So out here, there is some shallow drilling to do. We had some challenges too, because where those artisanal miners were mining historically, there are some pits that are water filled. And so we need to do a bit of draining so that we can actually access the places to put the drill so that we can do that shallow drilling. And so we will do that, but we are actually, I think we've set up a hole that we're doing here just to understand a little bit on the sediment side before we do a more systematic drilling of this area. So this area, as I said, we drilled a lot there last year, and so we did want to step out to the east, and we want to do the gaps, and we also want to do a bit of the camp zone. So we'll come back here because it is a particularly rich area, and it's past the end of the pit. It's just because we did the focus there last year and we kind of understand it, we wanted to explore some of these other potentials, like the northeast splays. We didn't have the time and money to drill those last year, but I think they're important. So it's like a kid in a candy store. There's lots of potential targets. We don't want to only focus on one. I think the next slide might also help answer your question. It's a little bit different. I just wanted to mention that while we're looking at this, you'll see there's all these zones. But, a lot of projects you look at, they'll show you a longitudinal section, and it's 50 meters. And that's their whole deposit. So I want you to see this. So this is you're looking at long sections along that 2.4 kilometer deposit, and that's our PEA pit there. And so I think this might answer some of your questions. So you can see each one of these is a 50-meter long section. So a lot of people in their mind, they would have just one. And in fact, the other project that was highly valued in country, this is what they will show you, 150-meter wide zone, because that's their deposit. We have multiple zones, and these actually continue. So very little drilling. There's our splays off on the north, right? So you can actually see there's very few drill holes out there. And if you look at the bottom, hopefully you can see that. You can see the gaps where there's no drilling, and that's where our drill holes are. And so these are areas that are easy to pick off. On the west, I'm just trying to answer there. If you look here, you see there's no drilling on that slice. Hopefully you can see my cursor. And in here, this shows it. And these are the areas we have to drill in here. Obviously, there's potential at depth too. Like the deposit probably does not slope down like that. That's just the nature of where we did our drilling. So we should be drilling down in here in these areas as well. The other reason for drilling down here is, remember, the purple is over 5 grams. Look at the purple and red down here. Same in here, purple and red. We should be drilling and filling in this area because there's probably good expansion potential.
Right. So you would expect to be able to bring. I mean, not only the gap zone ounces, which you could see ranging. I mean, it's of course forward looking, but 200 to upwards of 500,000 ounces, and then the inferred inventory most towards the west end of the strike extent right now, where you have shy of 500,000. Would you expect to be able to bring them into the same sort of pit design in the next resource in the same, or would you leave them out still, or how are you thinking around that? I mean, certainly for the PFS they would be brought in, obviously, but that's a bit further out.
Yeah, I mean, I think we have a good handle on what we would see the next resource potentially looking at, assuming these areas all come to fruition, which we believe they will. Those would, the question is, do you do a revised PEA or do you just work towards the PFS? Sure. Right, I think that's the question.
Yeah, so I mean, if you do a revised PEA, when do you think, if you make that decision, when do you think you can get that out, or when does it make sense to have a cutoff for the drilling and actually do that?
Yeah, so 2 years, twice, our first two resource estimates we did over the Christmas holidays, basically. So we did the work, like we kind of ended the drilling in early December and then got all the assays in, and then we had our resource out by early mid-January. So if we do that kind of timetable again next year, then again we could probably be at the PEA like 2 or 3 months later. And it's just given the advanced stage, this is a past producer, so and we're going to do a bit more metallurgical test work, and we're on site doing some of the other baseline stuff. I'm not sure it makes sense to do a revised PEA. We'll see. It may make more sense to go for that PFS. So if it was a PEA, then we could probably do that again 2 to 3 months after the revised estimate, the revised resource estimate, right? And also now we have a PEA in hand. I mean, updating a PEA, you're really just looking at the economics of your inputs again, right?
Yes. And then, I mean, just to discuss the depth potential here, of course, at Wenot is, what would you expect? I mean, do you have shear zones can go very deep, as we know, they might pinch to depth or something like this, and it seems like it might be increasing grade. Generally speaking, it seems to be pointing at. But can you just give your characterization of what you would expect a deposit like this to look at as you go deeper?
Yeah, I mean, I certainly, from my experience on orogenic gold deposits, and especially the ones with the subvertical zones, they go very, very deep, and often the limiting factor is economics and logistics. So, at some point you would want to do underground on this. However, this is a large, I call it the super pit because it is sort of in the realm of a super pit. It's 2.4 kilometers. Kalgoorlie in Australia is, I think that it kind of wavers, but it's often considered the deepest open pit gold mine in the world, I believe, and it goes down to 650 meters, and it's 3.5 kilometers long by about 2.5 kilometers wide. So you can take these. If you have such a large pit, you can take them down to 600 meters. It all is driven by economics. So the only thing is at some point in time, it's sometimes more economic to do declines from the bottom of your pit. And so I think you have that optionality with Wenot because, our initial read is that at depth, these zones, you can see them right there, those purple zones, it appears to be getting quite richer at depth. So there's probably one and maybe two zones that you could go underground. So we are actually going to do a series of holes deeper, and I think I've got a slide. So the deepest hole we did is actually in this purple, and I mentioned that 5.18 over 20 meters. So that we are actually going to do a series stepping out 150 meters at that level, 150, 150, and 150. We have 3 of them planned. And what that's going to do is that's going to expand your inferred resource and potentially in that next iteration, give you the ability to bring that pit down deeper. So that's another easy expansion. And I think, you always reassess these things. There's always the struggle between, do we go for more shallow or do we go and prove how deep this is? So we plan to do both. But so we actually did start a first hole stepping out 150 meters here. And the benefit is when we drill down there, we actually go through all these other zones. So we actually fill in, because you back up, you end up filling in some of these other areas as well, right? So a deep hole has the benefit of testing all these flanking zones as well. And I think the next slide might clarify the geology a bit for you as well. Okay, so let's look in cross section. So if you actually slice the deposit and you look, to the west, this is what you're going to see, because you have to say, what are all those different zones? So we talked about the central contact between the volcanics on the north and the sediments on the south, and I could tell you all about the history of the deposition of sediments, but I don't think you want to hear that part. But regardless, you can see that in that shear corridor, obviously a primary break was along the contact, and there's that quartz feldspar porphyry, that felsic dike I talked about. Even in here, it's pretty interesting. This is about the deepest part of the old pit. And why I show this is you notice that here we drilled that quartz feldspar porphyry right at the contact, and there it was running 4.77 over 22 meters. And the other hole from the other direction, 6.92 over 19 meters. That's underground potential, right? But what's interesting is look what, when the gold price was low, they actually went for this other zone. And what I believe this is there's a whole series of dikes, and they can merge into and actually coalesce with that central QFP, or they're in a corridor set apart to the north. And so what you can imagine, Mother Nature doesn't go in straight lines. So they kind of have the wavy, curvy, sigmoidal thing, like a river flowing along the full pit. But these dikes, this is where I told you, and I actually believe, for those into geology, that in that broad shear corridor that was reactivated and deformed multiple times, I think most of the energy actually was released in this corridor north of the contact, and it got all filled up with diorite dikes, felsic dikes, and just was sheared multiple times. And that's actually where that's what the historical mining for them was the most robust. So you see there we have 4.48 over 12 meters. When we do hit a lot of visible gold, it's often in this dike swarm through here. So that's another area where I believe you wouldn't just be able to go underground on the central contact. Probably you'd be going underground on this dike swarm as well. Then we have other zones up in the volcanics. And these ones tend to be alteration zones with just local shearing, as you can imagine, sort of on the flanks of that big shear corridor, a bit of deformation periodically, but not as intense as towards the center. And you can see out in this sediment one, they hit 1.85 grams over 22.5 meters. For some people, that's their whole mine. And so that's some of those splays that we're looking at and why we think it's worth pursuing them. And you can see in the old pit, those would barely have been mined. So the other point is, when we were talking about stepping back to test, so this hole is down at about 300, 350. So we are going to be stepping down to that 150 meters. And I know a lot of investors don't realize it, but for gold deposits, stepping out 150 meters is pretty big step out. But we're confident it goes down there. So we're going to be doing holes down here. But look what you have to test on the way down. We always do inclined holes. So that hole is going to be collared over here somewhere. So you're actually, by those deep holes, we're actually get the double whammy, because we get to test all of these holes, all of these gold zones down. So that's why we really like those deep holes, not just because we get to find out what's down there on the central shear. We get to find out, can we extend all this? And that's where we're going to add extra ounces. So with these holes, we're not just going to be adding extra ounces here. We're going to be adding them, assuming we still hit them here, etc. And who knows, it's kind of what I call going fishing. When you back up there, are there other zones out here that have never been tested? It's kind of exciting.
So you could, for one, you can see splays, of course, that can extend the pit width potentially. But you think you could see more sharing more sharing on the width of the strike when you step out in this regard? When you say you go fishing, you still see that potential for
oh yeah
strike.
Yeah, just from a basic geological perspective, my view is that the dike swarm is the center of, like they always say, like deformation's a lot of energy to be released. And to me, that's probably that zone 2 in there is where the maximum energy would have been released from that shearing process. But there's not to say that, over time or other things happen that, the ground gave way and some shears, some energy just spelled out a little bit to the margins. Wouldn't expect anything like this, but just remember, if those come to surface and they're outside the past producing area, they're shallow. And again, anything shallow that comes to surface is always beneficial to the economics of a mine plan.
Yeah, no, I think it's a beautiful way of doing multiple things at once, and very cost effective for sure. And so we know it's obviously it's open to depth, and the grade might be increasing, seems to be increasing to depth. You're stepping out towards the west, and if you go towards the east as well, what's the potential towards the east, and is there any geological reason for the mineralization to discontinue at some point? Maybe you can address that to the west as well as to the east. Just strike stepping out.
Yeah, to the east, I guess what attracted us to look at it initially, well, notwithstanding the fact that you would expect the shear, and the shear does continue. We see it on the geophysics, and we know that in the early 1990s, long before the mine came into production, a company called Placer Dome, that was a very respected, great explorers, they drilled a series of shallow holes out here, and very shallow. The deepest it went down to was about 75 meters. But they intersected a gold mineralization right to surface along this shear. And they ran things like, they were like 1.8 grams over 12 meters, 1 gram over 18 meters, things like that. I think there was one that was running 3 grams over maybe 20 meters. So there was incentive for us to do some drilling out here. But again, we've hit intersections that are, I think in that last hole, that drilling that we just did, we did a first hole here when we came into the property, because we had a new drill company, and so we didn't want to go right to the south gaps, which were long holes starting in the sand. So we put them on one hole here. So I think we hit 7.5 meters over a gram or something like that. So it's kind of consistent, and we did a little deeper than the old Placer Dome holes. Yeah, we hit 1.1 over 7.5 meters. When these things come to surface, as you know, some of those Nevada mines are down to 0.45 grams. So we probably are talking mineable material, and we will pursue it, because if we can extend the pit here, that's good. But one of the issues is in a shear, it is possible that there's a flexure or some kind of cross-cutting structure. We know that central shear and that QFP just keep on going, but maybe there was some reason why the mineralization kind of got into tighter spaces. So we need to probably do a couple deeper holes there, but I think we can, I think in our model of sort of that waterfall chart, we've only estimated maybe 200,000 ounces adding in here. I do think we have to go exploring a little deeper, just in case there's a flexure or something. Out in the camp zone, similarly, we had done 3 quick holes. There was one nice intersection that was, I think it's on the other section, but 9 grams over 9 meters or something. So yeah, and we intersected 2 meters running 30 grams. So there's definitely mineralized material out here. Doesn't seem to be right at the contact with the QFP. The QFP's there, but the zone seems to be to the north of it. And that's actually not inconsistent. I've mentioned the historically most favorable zone that they mined was actually 100 meters, 150 meters north of the shear. So maybe that's what we're looking at. So yeah, we definitely have to drill there. And we have a series of holes planned there as well. So none of our goal is between here and Christmas to definitely put a couple holes in each of these targets. I think we're not just learn a lot. I mean, we're looking for, where's, are we into something new, worthwhile at the camp zone that we want to move up the priority list, or do we hit something at East Wenot? That's sort of how the exploration works. Same thing. East Splays, we already know the south gaps are kind of a win. And I don't know if you saw in our drill results, but this one that also came through, we hit 2 intervals that were running over 43 meters. So beautiful wide zones. Yeah. So again, you can't, it's like the kid in the candy store. You don't want, yes, we know that it's good stuff here and it's going to contribute, but we don't want to leave some of these areas behind, because you never know. One hole can change the world. One hole can change your priorities.
I wanted to inquire about how you're thinking about Snake and Blueberry, because these are very different structures that you would be pursuing, and I would assume that they would require quite dense drilling to be able to brought into a mineral inventory. Can you just outline how you're thinking on the sort of 6 to 12 month time frame of what you want to achieve with those hypothetical high grade narrow structures?
Yeah, and basically here you can see it here. So actually, when Anaconda was there in 1947 and 1950, they put a shaft on one of these here. And I have some memos and stuff about it, but nothing. We don't really have any reports or information to speak of. in Snake Pond here, we're not expecting super high tonnage, but the trenches for Snake Pond, they run 6 to 8 grams. The second trench there is running like 12 to 15 grams. So just remember the average grade of Wenot is going to be, it's about 1.51 now. As we get deeper, it might go up a bit. And remember, historically, the fresh rock reconciliation from mining was 1.67. But Snake Pond, you're looking at even diluted, I would say 5 to 7 grams. So very different. But small tonnages. You're not looking at 1 million ounces here or 500,000 ounces. It sounds like some people might think it sounds insignificant, but even if you have 50 to 70,000 ounces, and they're contributing, 20, 30,000 ounces a year to your mine plan. We ran our existing PEA, basically looking at a slightly expanded model where 20% of your mill feed in your first 3 years comes from this. It takes your IRR from 18% to 28%. And so remember, they come to surface. So to me, the target is actually fairly modest. It's sort of a 50 to 100,000 ounces. So they sound, as I said, it's more about understanding that your net present value is really driven a lot by those early years, right?
Yeah. So what would it take to delineate those and be able to actually put them into a PFS, for example, where you would see maybe 50 to 200,000 ounces between the two structures to assist in the first 2 or 1 to 3 years to, make the payback a lot quicker, essentially.
Yeah. So I guess in my mind, my goal would be to get them into the next resource, or at least some of them into the next resource. I don't know if that's realistic, just because we have a lot of plans between here and Christmas. So we'll probably put a couple holes in them. I'm not sure we can get them into the resource this year. And what happens is, geologically, you're correct. These aren't 150 meter step outs. These are probably 25 to 50 meter step outs when we get a handle on them. So yeah, the goal is really to get them into the resource. I don't think we would get that done by Christmas. So
but for sure,
yeah.
for sure, it will be next year. If you do the same pattern by end of year, they will be well understood and ready for the PFS, at least, if they
Right.
play out.
Oh yes, absolutely. Because as I said, on this map, actually, both engineering firms that have looked at it in our PA, the proposer for the mill site is actually just here, if you can see my cursor. And so again, you're talking, these are 300 meters from the proposed mill site. So again, these are things that you even stockpile while you're building your mill, so that it's just locked and loaded and they're ready to go. Because it's mining's like any business. The highest risk is in the first few years, and the first couple of years, the startups and everything else. So if you've got something to kind of ensure that out of the gate you're putting through 5 gram material, that's a big bonus, right? So I think they have to be pursued, just because they're just logical from a risk reduction perspective for any potential for any production scenario, right? And then I guess the other thing, as you well know, we're not being an open pit mine. You start from the top down, and as I showed you, the grades increase with depth. So, and in the upper part, you're going to pick up some of the saprolite, which has the lower grade. You have no choice in an open pit. You have to mine from the top down. And so, so the grades in the early years are going to be lower than in the later years. So again, that high grade's important.
So what would be, there's limited drilling on Snake and Blueberry now, but do you have a sense of what the geometry might be of those veins, or the veining system there, or maybe you could call them cigars or something like this, cigar-shaped structures? Would they just be open pit with a higher strip ratio, or what would be the idea?
Yeah, there's actually historical information that helps a little bit. So historically, there were 2 main veins through here. One was called the Captain Man vein, and one was called the Electric vein. And in all the old maps, they show them striking this way, dipping 45 degrees to the northwest. And in fact, this Snake Pond structure goes right through the deposit and some of the best mineralized zones within the Gilt Creek deposit follow that structure. So we know it's persistent. We know the dip is that way. What happens is when you see things in surface, and I don't have a ton of earthly experience with saprolite. Obviously, in our Canadian shield, we don't have saprolite. But I have learned a lot, and I learned a lot from people that know a lot about it. And it slumps and it slides, and it's kind of like mud a little bit. So you can't trust the orientations of the veins that you see in the saprolite because they can slump when they get water laden. But historical work from, as I said, Anacon and others indicate that the dip is 45 degrees. So I think we have a better handle on it than when we first arrived. And so we did limited work because my view is you always put a couple holes in and then you figure out like what do you learn from those before you just go blindly on. We're going to have one geologist just focus on those and sort those out, because I do think you're right. Cigar-shaped deposits are much more difficult to drill. I guess the classic example, I don't know if you know Wallbridge. It's a company here in Canada that's been drilling the Fenelon project, and early on their high grade was in cigar-shaped shoots. And I was actually on the board of Wallbridge for 5 years, and also Josh Bailey, who just joined us, he was with Wallbridge. So I had him down I took him out to see Blueberry Hill and Snake Pond when we were there, because of course he's experienced that type of deposit before. So it's a matter of, you're right. Wenot is kind of pretty simple. The camp zone, pretty simple. Even the Gilt Creek, but those high grade ones, important. But yes, you're right. They're a little trickier. You have to keep your wits about you.
Right. So I mean, hopefully, it sounds like before end of year, base case scenario with these with the kind of the Snake and Blueberry Hill is to at least understand them quite a lot better. Potentially, you could allocate the resources to get them somewhat into a resource, but most likely that's going to be for the PFS. Would be a fair assessment, I think.
Yeah, and I'm going to go back down there in a few weeks, and again we'll take a look and see. Is it if we have a good plan going forward, we'll jump in.
If we just summarize, if you do this resource update just after Christmas and release it January, February, what, if you summarize for people now, what would you like to see? I mean, which areas would you like to test it more, so to speak? I mean, you're going to do the gap zones, you're going to do some work on the east zone, and also some of this mineral inventory that was excluded from the last resource. But if you just summarize that.
Yeah, I would say the one thing I say is one of the flaws for some geological thinking is people fall in love with one area because they know they can get easy gratification. And to me, you have to keep an open mind. Like, I have been involved with quite a few discoveries, and it's Mother Nature. There's no such thing as a sure thing. So you can my best work on discoveries were actually drilling in the less likely places where you get a surprise. So based on that, East Wenot is not my favorite, but I know that one hole can change the world. Same with the camp zone. Well, camp zone has some nice stuff. So to me, we try to do it all. Like, I actually plan to put a couple holes in the splays, a couple more holes in the East Wenot, a couple holes in the camp zone. Like, we do it all, because you do have to keep your options open. And we're still in the mode where we want to change the world. So we want to if we find a new discovery at the camp zone, that's a huge win for this company. So I know maybe if you're with a major company, you're much more systematic. You lay out a grid of 40 holes and you just drill them. But the benefits of being a junior is you can be nimble, and I believe that's why juniors make more discoveries. Right?
So put it this way, I mean, yes, and I very much agree. So if we just kind of do a line in the sand between two buckets before this next updated resource, how many meters will go to probing activities and how much will go to more shore, adding ounces to the existing pit, to the existing resource? You just make that split. Be interesting.
Yeah. I would say probably 40% is Wenot and 60% and probably out of the gate, 20% onto East Wenot, 20% on the splays, 20% on the camp zone. I'm not sure what I have left over. but maybe 10% on the camp zones, because we do. And then the other issue I would say is we've expanded the geological team and brought in some good talent. So my view is that when they get up to speed, new eyes is always important. And, if people can see, the new people can see something and have some new ideas, we're more than open to hear what they have to say, right? Because that's how you move forward on a project.
And you alluded to potentially adding a third rig. What would it take, and when do you see a potential decision point for bringing in a third rig? Is that kind of a snake or blueberry thing where you get one rig over there and let it work, those two ideas, or what would be the third rig, and when do you think?
No, the third rig would be actually to test Gilt Creek.
Okay.
So yeah, because Gilt Creek has huge potential, and it's not to be left behind. If you can see that, I mean, what would happen is we have to set up at surface, and then we would probably drill through down in here. We have a few proposed holes, and it's not so. One, it would be metallurgical test work and basically some work that needs to be done on it anyway. But I think it also would be fairly helpful. We believe this can be expanded as well. I don't think that would be the mandate because, bear in mind, this has to be you can see here, we have to drill from surface. This is 300 meters down. So that drill hole is going to be, a kilometer plus. So we do have a third rig, and there's actually 2 more rigs available to us that are sitting in Georgetown. Also, they have the ability to drill down to 2,500 meters. So we can add that, but we would not do that till, we just added the second rig a couple weeks, like week and a half ago. So again, I don't want to expand the camp in sort of incremental ways because we have to bring in additional geotechs and expand. So, I kind of would like to see that hole done, at least one hole done before Christmas. So that means we would probably have to start by, late October, early November.
And if we just stick on Gilt Creek before moving on to kind of the development and strategy part of the discussion, can you just outline what the key potentials for Gilt Creek would be? And I mean, right now you're not going full blaze on it, but you do want to obviously probably include that into the PFS, and we'll get to that discussion soon. But so for these few holes, you might start drilling before Christmas and continue drilling towards the early stages of next year. What's the immediate objectives or potentials you see there?
Well, I mean, adding that into a mine plan and either an updated PEA or a PFS would be profound, right? Because it's another deposit. Basically, the modeling we've done and sort of the general opinions from the engineering firms we've dealt with is that this would be about a 3,000 ton per day operation. So that means, in our current model, for example, where we did a 9,000 ton per day mill. So by adding the extra 3,000 tons per day, that would ramp you up to over 200,000 ounces a year. And of course, the material coming from this is going to be, twice the grade, about twice the grade of what would be coming out of the open pit. Right. So
in terms of doing the whole, so in terms of spending more capital, because you have a resource here already, so that could be brought into it. It's a large portion is indicated already, so that it can be brought into the PFS, but allocating more incremental time from the diverting potentially as a steel manner, I guess, or as a criticism. Maybe it's more well spent on drilling out more shallow open pit mineralization, doing Snake Pond or Blueberry Hill. So if you just defend on why do you think it makes sense to drill more into Gilt Creek? I mean, what's the return you would see on that investment?
Well, I think we need to do the metallurgical test work on this and also sort of the rock mechanics and an idea, because that's going to assist us in doing some kind of mine planning. And of course, what happens with like open pits, pretty straightforward, fleet of trucks, you get a bunch of people to design an open pit mine. For the most part, it's going to look pretty much the same. Certainly the capital going into it's the same, fleets, manpower, etc. Underground is different. I think the nature of these very wide zones and the fact they're relatively flat lying there's a lot of people have asked us about, is this bulk mineable? And one of the classic, bulk mineable deposits in Canada is the Young-Davidson deposit, which of course Alamos has, and they're mining 2.3 gram material. That's intriguing, but it's relatively high capital. In other words, what I'm saying is there's a lot of different ways you can mine underground. And so probably if you had 3 different engineers, experienced mining engineers, designing how they would mine this, they'd probably all be different. So that's a bigger study for us. I'm not, certainly for the existing PEA that we did, I did not think that was a good use of our money. Going forward, it may be at some point that we need to at least start down that road. I guess we haven't talked too much about what's the destiny of the company. But to me, anybody, if we end up being acquired, any acquirer that's looking to develop this will probably have their own views on how to develop the underground. And that's going to be sort of a composite of the experience of all their people and the engineers they use. So I don't think our incurring costs on the engineering is the best use of money to advance the project. If you follow, does that make some sense?
Yeah, it does. I do agree. But I mean, these holes you're drilling now is just kind of the basic. You're getting the metallurgical information, and you're getting some more information about, from the core and so on. But and you might be extending the mineralization. Of course, it is open to depth and potentially just below where it's a bit more shallow currently. So you might be adding some more resource there, but that's not really the main idea. No, it's just mostly kind of basic met. That's the big priority for Gilt Creek. And in terms of activity next year, you don't see yourself drilling or allocating millions of dollars towards drilling with Gilt Creek.
No, but you see, so I think there are benefits. Like for me, I always try and de-risk a project in any way you can. And by de-risk, I just mean like a potential acquirer has certain questions. Is your title to it clean? Do you have this? Do you have an environmental permit? So I mean, I try to move forward in all those things. So one of the questions is, so for the metallurgy of Wenot, those zones are subvertical, and you're in a shear hosted deposit. The zonation of the mineralization and the alterations, to me, we don't see that. So in other words, we believe that the material, plus we're at the along strike and still shallow. So we don't believe that the metallurgy of Wenot is going to be different. There's no reason geologically to see it's going to be different from historical. However, the Gilt Creek deposit is an intrusion, and intrusions by their very nature are gradational when you get deeper. The nature of the intrusion can change. You can expect the nature of the mineralization may change. So one of the questions that people ask is, yes, we know what the metallurgy was at the top, 250 meters, or down up here, but what happens when you get down 300 to 600 meters? So it is a question that people ask. And so by drilling a hole there and doing the metallurgy, we can have some insight and be able to answer the questions, is it different? Is it more silicified? Is it harder? Is it going to recover the same way? So it does answer some questions.
So it sounds like you want to bring Gilt Creek into a position where you're able to bring that into the PFS somehow, into the design of the camp, essentially, where there might be a sequential or a sequential or parallel development of Gilt Creek and Wenot at the same time, depending on kind of the sequencing of capital and so on, and the sizing. Would that be a fair assessment that that's the goal, at least, to try to get Gilt Creek prepared for that? PFS.
Right, absolutely. And at a $2,500 gold price, this thing is amazing. There's a couple of, I mean, and just remember, some people have underground that is underneath their pit. And so they can't actually access it or develop it until they get their pit mined. However, this you have complete optionality as to when you develop Gilt Creek. It's a standalone. So, at a $2,500 gold price, I think people running this will go, wow, that's not something you leave sitting there. So there are other issues. Now in Guyana, there's quite a culture of open pit mining. There's a lot of history. I mentioned the open pit bauxite mine. The Aurora mine has mostly been open pit. The Troy mine that was nearby, a lot of open pit mining experience because it's mostly truck operators, etc., loader operators. Um, Underground mining is different. And I mean, that's what any places where, whether you're South Africa or Canada and our shield areas, you will hear that underground mining is a skill set. It's not the same as driving trucks into a pit. So Guyana does not have a lot of experience in underground mining. And so, again, just from a perspective of capital usage, you're probably going to develop the Wenot pit first and get your cash flow for a couple years before you actually start developing the underground. It's probably, from a financial perspective, it makes more sense to use the incremental capital as long as you're kind of anticipating, either that excess mill capacity. If you build that at the beginning, that might be because you're putting Snake Pond and Gilt Creek through, or sorry, Blueberry Hill through it. But and then replacing it with the Gilt Creek once you get your underground operating, or you do a mill expansion for Gilt Creek at a later time. Again, more spanning the capital draw once you've got cash flow from your open pit operation.
Let's just take a look at some of the more regional ideas apart from Wenot and Gilt and Blueberry Hill and Snakes and so on.
So magnetics doesn't always work for gold deposits. Same thing with electromagnetic IP. Other geophysics systems are great for large, metallic deposits. Gold is different. And we've got a little bit of pyrite. When we see the bit of pyrite, we tend to get the gold. So you still use geophysics, but magnetics often help you understand the rocks. So we did some additional work on the airborne magnetics using something called inversion mag. And we actually tapped into somebody who, I think he was one of the co-founders of using inversion mag to work with us. So you see the Wenot deposit is a magnetic high. The red are magnetic highs. Actually, you can argue, you go, oh, well, it stops and it doesn't continue here. Well, we already know that over here we have 900,000 ounces. So we know that you don't need the high magnetic signature to get significant gold, but obviously it would not. It is there. Same thing to the east. We know there's mineralization, but you're not getting the mag. But more interesting is the mag lows. So this is that intrusion, and you can see this is a mag low over this. And we've all known, everybody's known there's a mag low in this area, this called Broccoli Hill. And so this is kind of intriguing. I actually always say this looks like if you're a Star Trek fan, a Trekkie, looks like the Klingon bird of prey. So what is this mag low? I mean, it is intriguing. And then further, the boneyard, that's that area I showed you in the picture where the artisanal miners were working. And again, it's a mag low. What's that all about? So just remember, this mag low over here appears to be correlated to our intrusion. And that intrusion was a rigid body that got broken up by the shearing. So if this is another intrusion, or if this is another intrusion, again, very close to that shear, are they broken up as well? So Broccoli Hill has had a lot of work over the decades, and I don't have my slide, but a lot of geochem anomalies. There was a lot of artisanal mine workings up there. It's not cleared. It's still a sort of treed, more or less. It's got lots of paths and roads over it. But, this is an intriguing target. And some of the people that, they're always asking, have you drilled Broccoli Hill? We did a couple holes, but this target alone is like, well, you can see the size of Wenot. It's almost the size of Wenot. It's 1.5 kilometers, big area. We drilled a few holes up in here. We do intersect gold. I think some of them are here. Yeah, I mean, we got 5.63 over 1.5 meters, 7.16 over narrow. So we still hit gold. But, when we're looking at a Wenot, a couple intersections of gold, we're not looking for intersections. We're looking for deposits. So we do have some follow-up work to do there that's intriguing. The boneyard we'd like to drill, but it's very wet. It's almost like quicksand. So we tried to put a couple drill holes in that last year, but where we had to set up, we weren't going to really be drilling the target. So we need to reassess how we actually drill that. So there are some exciting things. As I said, we've always been kind of sucked back to Wenot because it keeps growing.
Right. So if we just transition to that point, and we kind of covered it a bit now. So how do you want to position this camp to maximize value extraction for shareholders? Because you've recognized yourself, you're explorers. That's your strength here. So at what stage do you think it's best to position this asset for when the capital intensity might be significantly ramping up? So after a PFS, you would have to go into reserve, and then the drill density might have to increase significantly, and the capital required might increase significantly. So can you just outline what your current strategy is in this point in time, what you think will make most sense? And you can also comment on the sizing that you think would make sense in terms of the production profile and sort of capital for what sort of sort of company you think would like to acquire this camp potentially. I mean, you just give me your current thinking on this broadly.
Sure. Yeah. Well, I mean, I think one of the backdrops is the fact that the gold price is high. And one thing that you can't disregard is the fact that all the producers, or most of the producers, are absolutely cash cows right now. They're, costs have not started to escalate, so the margin per ounce for producers right now is vast. They all need to grow, or they all want to grow. Some can grow through discovery, but mostly they have to grow through acquisition. So I think you're looking at a group of producers that, they see a very robust gold price. They're getting cash rich. What are they going to do? They're going to look for other large projects that can be developed quickly. So I think we are one of those projects. And so I think that we're obviously a candidate. So I think the question is trying to show how large this is and what the potential is for a very large scale mine. So, at 140,000 ounces, we're in a certain category, but I think we want to make it perfectly clear to people, and I believe it to be true, that this is not a 13-year mine life. It's a 20-plus year mine life. And it's not 140,000, that the target should be more in the 225 to 300,000 ounces a year, which is what, of course, it was before. So I think the goals are the same, and I think everything that I do tries to be in a direction that's constructive to this company, should it change the management team and decide to build the mine, or whether it's acquired, so that we've got the project well on the road to a development scenario, right? So, and I mean, obviously, the bottom line is very simple. When you run a public company, you want to create maximum value for your shareholders. So at the current time, I don't think that we're properly valued for the size of the asset that's clearly here. So, I mean, I still, as per the last 3 years, I want to show people how big this can be. And you have to demonstrate that. And that is the focus of how we drill.
But
right?
You're thinking, I mean, you're going to do a PFS, and that's going to be kind of this time next year is going to be relevant to that's going to be very close at that point. But you're not going to be, I guess we'll see. I mean, I'm not going to say you're not going to be, but what you're talking about is a kind of a 6 million ounce total global resource, upwards to maybe 10 million. This will be the range where you say, okay, I've done my job. Now it's time to get serious with engineering, because if you add beyond 10 million ounces, it's going to be just expanding the mineral inventory into 30, 40 years or something like this. So that's the range for your goal, it sounds like. And at that point, it's going to have to move into feasibility, and new management's going to come in, or you're going to be acquired. And it sounds like PFS is going to be the final stage in terms of engineering. You might do an updated PFS at some point and add in more mineral inventory, but that's going to be, that sounds like the thinking. Would that be a fair assessment?
Well, I think, though, yes, but no, because just bear in mind also is that, in Guyana, the government and the communities very much want to see this come back into production. So, they don't want to see a 5-year timeline. They want to see a shorter timeline. And, we all know in the mining business, if you've got a receptive government that wants to see you develop the property, you need to go as fast as possible. And so we've been trying to do that. So I think that will still play a part, whether or not it's us or another group, because people want jobs today, not 5 years from now, and the government wants revenue, the various tax revenues and royalties, sooner rather than later. So it's a unique environment from that perspective, in the sense that you've got the support and you've got them wanting to move forward. You still have to optimize a project, right? So
Yes.
that's why I say, um, a 13-year, this is not a 13-year mine life. So we need to advance that as soon as possible. So when you talk about, a revised PEA and then a PFS and revised PFS, that's going to be profoundly accelerated on this project, right?
Sure.
Just because, and then also remember, you got road access, you got a history, you've got a workforce nearby, you've got a receptive government, you've got an EPA that knows the project and understands the project. So it's basically a go, and so that overlies that timeline, right?
Right. So it sounds like the government wants construction readiness or a construction decision within 3 years. That's essentially what they want.
Absolutely, or sooner. The sooner the better. So,
And just to highlight again, as you said, I mean, power, logistics, terms of road, that's there. You have the workforce close. So you're checking all of these major boxes that are not always checked and can be a tremendous issue if you don't check them. And then, of
right,
course, you have on the federal level, you have very good connections, history with people having worked there, the entire country knowing the mine, most having probably family members who worked with the mine, right? And the top politicians and presidents so on personally,
right.
etc., etc. So I mean, it's obviously extremely feasible. It's going to be fast tracked. So permitting, we don't even need to really discuss it. I think it's obvious that's not going to be a choke point for you or anything like this. That's going to be expedited as is required.
Right, and it has some advantages too, because remember, the mine shut down in 2005. It's 20 years ago, but it's still well known, and a lot of the fellows in government are obviously a little bit older, so they remember it. Some of them have been there. Well, most of them have been there, to be honest. Yeah, so it's not an unknown, and they do look at it as a restart. You're restarting the old project, and I don't look at it that way, because it's a little bit different, but they're right. We are essentially restarting it. And we're probably not going to be rehiring the people that work there unless they came there from university, like the fellow that I hired. A lot of them they're going to be their kids, but that's fine, because they had very positive feedback on both the health and safety record that people had, and also the job opportunities and basically the life opportunities that working at the mine gave them. So again, last time the mine was only open, I guess, really 11 years. And that doesn't see people through their careers. And that's the other reason why I say, um, a 13-year mine life is good, but a 20-year mine life plus, that's a better benefit for a country like Guyana, is a long timeline. And fortunately, that's also any big companies that want to do a large development on this project, that's what they want too. They want the 25-year mine life. And I would say that's the other reason why we're doing a little bit of the drilling at depth, because we're confident the deposit continues. And if we can show people, no, you know what, this goes down that extra level, even if it doesn't have maximum impact on our current economic model, it shows people the path towards a 20-plus-year mine life.
Yeah, I mean, just putting a few holes there showcase the mineralization doesn't have to be folded into a resource inventory. It just showcases that it's there, and that might
Great.
be very important for a major to actually see that crystallize. So that's another kind of de-risk thing, giving the longevity that you're speaking of. But let's wrap on this. Why don't you just say in clear terms where you want to see Omai in 3 years from now, if you're still around at that point?
3 years. Okay, well, into construction, and hopefully with a starter pit or two actually underway, because I think that's sort of the time frame we're looking at, is in 3 years. There's that's 2027. Yeah, there's construction well underway, and some starter pits going.
Right. Well, that's you can't say that for most companies in your position in another jurisdiction. Put it that way. That's quite unique to be on.
I suppose, but and then of course, it's hard for people. So many jurisdictions in the world, there's red tape or the attitude that they don't want mining in their backyard, and the timelines. And I think that's the other thing, as all the analysts that do their analysis, you always notice they start their net present value on the construction time, and they don't actually calculate what the financial impact is of, a 2, 5, 7 year permitting window, right?
Sure.
you know so I think it is good. A lot of companies have come down to Guyana, and they're getting familiar with the government and the environment and the jurisdiction. But to some extent, it's a small country, so there hasn't been a lot of mines. There have been a few for sure. But yeah, people have to get familiar with the jurisdiction and understand that, yeah, they are mining friendly.